Today I'm buying these two Yieldmax funds that are still cheap, whereas the market is at all-time highs. So I think these two funds offer a good risk-reward proposition for us FIRE investors. FIRE stands for Financially Independent Retire Early. We earn over $200,000 per year in dividends at this channel, and my performance value shows that we're up 15% for the year. The S&P is up 9, the Nasdaq's up 8, the Dow's up 3, and the Russell's up 1. We were also up 6,000 on Friday, or 0.73%, which was in line with the Dow roughly. So we're beating all of the indexes on a year-to-date basis and on a daily basis, and we're collecting these dividends of over $200,000 per year. And this helps us live the FIRE lifestyle. If you need help living free from a 9-to-5, email me for my e-guides at aikentod48@gmail.com. Also, if you want to follow my portfolio, just click the join button on my wall at YouTube, or I'll link it in the description below. So in order to buy these two Yieldmax funds, you have to take a couple of things into consideration. First, you have to look at our margin debt, okay? My margin debt is around $250,000. It was $270,000 a couple of days ago, but I just got my dividends from Defiance and Cornerstone. Also, if you go look at my dividends of around $200,000 per year pay back this debt in around 1 year. So I'm not worried about margin leverage or margin debt. I always get the question, well, what's going to happen in a market crash, Todd? You have $250,000. What's going to happen in a 20% correction with your margin leverage? Well, we outperformed in 2022 with my margin leverage. And again, my dividends pay back my leverage in around 1 year. So I'm not worried about this leverage because it disappears. Also, I have short options on in case the market falls. Even if the market fell 20%, my available withdrawal is still a high. Okay, this number has to stay above 0 or you're in a margin call. So I can withstand over 20% corrections in the market and withdraw freely out of my brokerage account. And that's how you live the FIRE lifestyle. Because I have to pay all of my bills out of here. I have to be able to buy whatever I want with my E-Trade card, because you can swipe your E-Trade credit card and go wherever you want in this world. Okay, and I have to be able to not only pay for my bills and pay for all my expenditures out of my brokerage account, but I have to be able to withstand margin calls. So I have to be able to withstand 20% corrections or more in the market and withdraw freely. Even if you're not using margin debt, you want to have a high available withdrawal so that you can withdraw freely from your account. Maybe some people don't want to use margin. Maybe they just want to sell options. Well, again, you have to have a high equity number to sell options against. Otherwise, you won't be able to withdraw freely out of your account. Now, many people don't want to withdraw freely. They just want to work a job, and that's fine. You can really level up using both a job and dividends. But if you want to live completely free out of your brokerage account, well, you have to keep this number high and keep your maintenance low. Okay, I already explained to you why my margin leverage isn't a thing for me. It's not a worry for me because my dividends pay this back. Plus my equity level is high. Okay, but the reason why I keep this high is because of maintenance. If we go to the first fund that we're buying today, which is Yieldmax, if you go to the maintenance of Yieldmax, you'll see that it's 50% maintenance. And this is a killer to the FIRE lifestyle. Okay, you have to have low maintenance names when you're trying to live the FIRE lifestyle. And that's why I have Cornerstone as my top holding, okay, because it's 30% maintenance. Cornerstone is also a 4-star fund. It has a 21% dividend and it tracks the indexes. So that's how I'm able to get days gains performance like the index, but also get high dividends. And that's because of Cornerstone. But Cornerstone also allows me to have my available withdrawal high. So when you buy Yieldmax funds, you have to keep in mind that their maintenance is high, okay? Whereas Cornerstone's maintenance is low. If you need help understanding maintenance, that's in my Volume 3 e-guide. Cornerstone, this is where I anchor most of my money to. Cornerstone, Defiance, and then Yieldmax. But Defiance has 50% maintenance and Yieldmax has 50% maintenance. Now, you can go to other brokers who have lower maintenance for Yieldmax and Defiance, but they might not have the special drip for Cornerstone. People always say, you're bringing up Cornerstone. All you do is talk about Cornerstone. Well, I have to talk about Cornerstone when we're talking about Yieldmax because, well, if you buy nothing but Yieldmax, all your equity is going to be gone and you can't live freely out of your brokerage account. And again, you could go to other brokers who have lower maintenance for Yieldmax so that you could withdraw freely out of your account, but then they won't have the special drip for Cornerstone. Cornerstone is, again, 4-star, and it's a really special fund. It takes its dividend, its 21% dividend that it sets every year, and it drips it down at the NAV for free money every month. Also, you can see Cornerstone moves up on its chart. Look at this chart. You can see how it's moving up here. So Cornerstone is my way to get not only dividends and low maintenance, but it drips your 21% dividend down at the NAV for free money every month, and it gives you 20 to 30% premiums per year. So you can get upwards of 50% gains from Cornerstone if you play it properly, which is is in my volume 4 e-guide. Cornerstone, you have to time it around its rights offerings. You have to time it around its premium levels. And so that's how you really outperform with Cornerstone. Also, when you buy my e-guides, you get free access to this Discord chat room for life, where we have almost 1,000 members in here pursuing the FIRE lifestyle. We have a Yieldmax channel here. We have a Defiance channel. We also have a Cornerstone RO discussion channel. Okay. And we alert you of the rights offering announcement in Cornerstone through Discord. Okay. So again, if you want to play Cornerstone properly, that's in my volume 4 e-guide. Discord is free when you buy my e-guides. Also, my phone number is free when you buy my e-guides. So many people call me when they want to negotiate their margin interest down. I've negotiated my margin interest down to around 6%. I've negotiated it down twice, and many of my clients who bought my e-guides did the same thing. I shared with them the script that I use to negotiate my margin rates down. So when trying to live the FIRE lifestyle and buying Yieldmax, that's the first thing you need to watch for is the maintenance, okay? Now, the reason why I'm buying Yieldmax is because it doesn't erode as bad as other Yieldmax funds. As you can see here on a chart, it's moving upward, left to right, and it's making a set of higher highs and higher lows. It also has a nice dividend. But the real reason why I like Yieldmax, YMAX, is because it has other holdings within it that are still cheap, like financials, energy, consumer cyclical. Yieldmax puts all of its funds into YMAX, and YMAG is more of the Magnificent Seven, which I've been more bullish on this year. As you know, I've been choosing YMAG over YMAX because YMAG has the Magnificent Seven and it moves up bigger than YMAX when tech is moving hard. But now tech is expensive and the market's expensive. So where can we get that exposure to the overall market where the other 8 out of the 10 sectors in the S&P are still cheap? Because 8 out of the 10 sectors, financials, energy, materials, consumer staples, consumer cyclical, I could go on, healthcare, again, they're all still relatively cheap compared to tech, which is about 20 to 30% of the indexes. So I want to find some index exposure that's not so heavily weighted to tech. So I'm going with YMAX first. But again, beware of the maintenance in YMAX if you're trying to live the FIRE lifestyle. The second fund that I'm buying is OARC. Okay, OARC, I'm buying this because if you look at the Russell IWM, you can see that it's not back at its old highs yet. It's still off the highs. It's still cheap in my opinion. Plus OARC or ARKK, because OARC tracks ARKK, plus ARKK tracks the Russell. If you look at a chart of the ARKK funds in the last year, you'll see here that it looks almost like the Russell. As you can see, it's bouncing off of this blue line, this 50-day moving average. We had a break here to the 100, and hopefully this holds and makes a set of higher highs and higher lows, a nice series of higher highs and higher lows there. Whereas if you look at the IWM, the Russell, you can see it looks pretty similar. It's looking more constructive though than ARKK. It's moving up on its moving averages, on its 50-day moving averages, 50 tag, a tag of the 50, a 50, 50. If you need help understanding chart, that's in my volume 2 e-guide. ARK is tracking the Russell pretty closely, but not exactly, because ARK has some other funds in it that are not indexed at all. So IWM is obviously going to track a little bit better when it comes to indexing with small caps. So IWM, I want more exposure to IWM because it's cheap. It's not back at the old highs yet, and it has a lot of Bitcoin exposure. If you've been trying to play Bitcoin, IWM also has a lot of Bitcoin holdings within it. If you go to the portfolio of IWM, you can see that it has MicroStrategy, which is a big Yieldmax name of ours, Misty, MSTY. So it has a lot of interesting Bitcoin names in it if you're trying to play the Bitcoin run without the risk. And so I like to buy indexes so that I get my performance, as you know, without the risk, okay? If you use some margin like I use, around $250,000 in margin debt, and the dividends pay that back, well, you're just going to get extra index performance because I buy the indexes. But if you buy stocks that have a mind of their own, they could have headline risk and fall, and then make your portfolio not track the indexes. Obviously, stocks can fall way harder than the index. I mean, Misty was down 10% on Friday, and the indexes were up. So I generally want to go with the indexes at all time, and Cornerstone allows me to do that, and so do Yieldmax funds like YMAX and OARC. And remember, OARC tracks ARKK, which looks very similar to the small caps in IWM, and YMAX is the total portfolio for Yieldmax. So I'm buying those two funds because they are cheap. They also give me qualifying income to banks for loans. These days gains that we receive, 6,000 in days gains, and the performance that we receive, 15% for the year, that's not going to qualify to banks for loans. Only my dividends, which act as a pay stub. So trading gains don't work, Bitcoin gains don't work. I only want index performance so that I don't risk margin calls. They don't even take performance from the index to give you your qualifying income. So I want the dividends from these indexes. And that's what Cornerstone really gives me, which is an indexed approach here, but also with a high dividend. There's no other fund that tracks the indexes like Cornerstone that has a 21% dividend like it does, that also drips down at the NAV, et cetera, et cetera. So as long as I'm tying all of my investments to the indexes, then I'm going to fall by the amount of the indexes, which won't be as much as a stock. And that ensures that we keep living the FIRE lifestyle. So it's not about Cornerstone. It's about the maintenance that Cornerstone gives me and the index exposure that Cornerstone gives me. And it's not about Yieldmax and its dividends. It's about Yieldmax and the index exposure it gives me without the erosion. And it's about ARKK, how it tracks the Russell. And so we're just getting more index exposure like this. They all have their own objectives that they achieve. Cornerstone gives me my growth and low maintenance. Defiance gives me my obscene amount of dividends but goes sideways, but they have high maintenance, so I can't put all my money in Defiance. And then Yieldmax gives me some growth, some dividends, but it has high maintenance, so I can't put all my money in Yieldmax either. I need to put all my money someplace where it's low maintenance, tied to the indexes, and the dividends don't fluctuate. Cornerstone sets its dividend for the year, so it doesn't fluctuate, unlike with Yieldmax and Defiance. You could also go with a JEP-E or a JEP-Q or an SPYI to anchor your portfolio, but they don't have the performance and the low maintenance like Cornerstone does. Again, if you need help understanding maintenance, that's in my Volume 3 e-guide. If you need help understanding Cornerstone and how to play it properly, that's in my Volume 4 e-guide. And if you want to follow my portfolio, just click the join button on my wall, or I'll link it in the description below. Remember, when you buy my e-guides, you get free access to the Discord chat room for life, and you get my phone number, so keep that in mind. Okay, and if you like the video, click like or subscribe, and I'll talk to you soon. Thanks.